Ladies and gentlemen, good day and welcome to the Take Solutions Q3 Results Conference Call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Vinay Bafna from ICICI Securities. Thank you and over to you, sir.
Thank you, Karuna. Good afternoon, everyone, and welcome to Take Solutions conference call post Q3 FY21 results. I would like to thank Take Solutions for giving us the opportunity to host the call. Today we have the top management from the company on the call, represented by Mr. Srinivasan, Vice Chairman and Managing Director, Ms. Shobana, Executive Director, Mr. Lalit Mahapatra, CFO, Dr. Ayaz Hussain Khan, Global Head of Generic, Ms. Soumya Kaur, Clinical Head for APAC. Over to you, sir.
Thank you, Vinay. Good afternoon, everybody. This is Srinivasan, and it is my pleasure to welcome you to the Q3 earnings call of Take Solutions. First of all, I have to say that it has been a very satisfying quarter. We've had a moderate recovery, and we are looking forward to a healthy outlook. Having outlined that, I think it's very important to context the journey in the pandemic months that we've had and how the company has responded to it. So I want to go back to Q4 of the previous FY, which is when the pandemic hit us hard. And you will be aware that we are in the business of primarily clinical trials. It is a contact-intensive business. And there were several challenges because of which we could not perform the operating activities that lead to revenue. Primarily, most of our activities are performed at sites which are either clinics or hospitals. So prima facie, the capacity of that was going to addressing pandemic issues and was not available to perform the trial activity. The next, there was a serious disruption in the supply chain of trial supplies because of lockdowns and because of several other constraints that are in federal governments across the world. And third and most importantly, at the time of pandemic, when it was prevalent with the virulence it had, patient recruitment was a challenge. Not many people wanted to volunteer to come to be in the clinical trial space. This is something that affected not only us, but it affected globally. More than 4,000 trials came to a complete halt. Though I can tell you now that more than 50% of those trials have recommenced. So we went through a difficult situation in Q1. It improved marginally in Q2. And there we were, I think, the first and the most important move for us when we strategized as a company at the board level and at the management level was that how do we become cash positive in the shortest possible form of time. Towards that end, we had to make non-trivial moves. And I'm just going to call out some of them so that you understand the intensity of the 9 months that have passed and what the management has done to bring the company back to an EBITDA positive, cash positive state. First of all, we decided that we would shut down all the businesses that we did not see visibility going forward into this FY and the next FY, which could generate cash. So we took a hard decision of shutting down our Europe business during the first quarter of this year. The second one was that we decided that employee cost, which was a major contributor to our cost, we have to reduce that significantly. So just to call out some headline numbers, in Q3 of last year, I think we were at about $29 million for the quarter in terms of employee costs. And you will see that this quarter we are at $16 million in employee costs. So we right-sized ourselves to the pandemic situation to be able to bring the company back on cash profitability. Similarly, if you look at the SG&A expenses, which were about $25 million a quarter, around $5 million a quarter. Obviously, several of those activities like travel and meetings and conferences are not taking place, so that added to the ability to reduce these costs. So management has been very conscious of the steps, outlining the steps it was going to take and how we were going to return to cash profitability. With that in focus, I think we need to understand that obviously the expense reduction came first. And as the environment improved and the revenue ramp up happened, we returned to cash profitability. So during the first quarter, I think our utilization rate was between 15 and 20%. It improved to the mid-40s in the second quarter. The third quarter is at about a 60% utilization rate. And we are seeing continuous improvement as we are almost halfway into the fourth quarter. We certainly look at the fourth quarter being significantly better than the third quarter. So just to call out some headline numbers and activities. The revenue for the quarter stood at $30.61 million. While in itself, it may be seen as a 4% growth Q on Q, I want to call out that we divested the supply chain business. So the Q2 numbers had the supply chain business in it, and the Q3 numbers don't. So when you just compare on what is the revenue growth on continuing business, in dollar terms, we are at about 32.9% in Q on Q in continuing business. The order book continues to be very healthy at about $170 million. I have called out in the previous calls also that it is more our ability to consume the orders that is getting constrained. It is not the order book. We are very hopeful that Q4 will be a significant growth on Q3, and that we will be, while we've already turned cash positive, we'll be positive at the PAT level as well in Q4. In the span of 12 months from when the pandemic hit to now, I just want to again reiterate that many of the moves that the management has taken are non-trivial moves, and to be able to perform that in a short possible span of time, to be able to compress this, has been a very satisfactory achievement of this management team. I want to call out a few important areas. The first and foremost is that we see a lot of intensity of deal activity that is taking place. Most of 90% of our business for us comes the same set of clients, which means there is a lot of repeat business in this. And we are seeing our existing clients reach out to us for more and more help in the regulatory, in the clinical, and in the pharmacovigilance space. The intensity of BD is almost at pre-COVID levels. And maybe just to give a context to this, I'm going to invite my colleague Soumya Kaur, the clinical head for APAC and head for Global Client Solutions, to come in here. Soumya, would you please step in? Thanks.
Yeah, thank you, Sri. Good afternoon, everyone. Just to add on, from a perspective of our growth, we have seen that some of the COVID programs, what we have been working with large specialty pharma and some additional pharmaceutical organizations, we have been able to close those studies quite successfully, and also we have been able to deliver it in a very seamless fashion. With the delivery being successful, there is an opportunity for us also to expand with these particular clients into other markets like US. So we have been successfully able to adapt the technology for these programs and also adapt the same technology for other markets as well. So that's how the business have been growing in the COVID space. In addition to that, as the non-COVID therapeutic area programs have been opening up, there has been a significant increase in how we have been able to perform the virtual trials, how we have been able to kind of, in this current pandemic situation, adapt to it and execute it in a seamless manner has been tremendous. And these solutions we have been able to provide to other clients as well. And that's the reason that even the non-COVID programs have been kind of opening up, and we have been able to deliver it as we are moving ahead in this pandemic. So there has been quite a bit of rigor in the engagements with the existing clients, and with the execution and on the ground, our performance. There are a lot of references which we have been getting from the new customers as well. So there is a kind of a head start in terms of the non-COVID studies in other therapeutic areas as well.
Thank you,
Thank
Sonia.
you.
So just to context that, I think we are going to see a very healthy growth in order book in Q4, and also a good consumption of the order book in Q4. So hopefully on the next call we'll have a much better set of numbers than what we've already seen. An area that we need to again maybe refresh is how the operations were performed during the COVID times. Obviously, the first 2 quarters were with constraints. But after that, even from the second quarter onwards, we've started reopening the trials and the studies, inpatient studies that we do. The post-COVID or the COVID times call for very different protocols. So there are SOPs that have constantly been rewritten, and there are demands from regulators to do several new things. Obviously, we've taken a very conservative stance of how to keep everybody safe and do it more intensively than our capacity would allow. The clients come to us because of our scientific expertise and the IPs that we create, which is either the novel adaptive trial designs or the novel methods that we have for the phase 1 studies that we do. And I can assure you that this has helped us resonate very well with the clients. And to speak a bit more on this and give a color to this, I'm going to invite Dr. Ayaz Khan, our global head for generics, and to say a few words. Over to you, Dr. Ayaz.
Thank you, Srinivasan. As Srinivasan addressed here, we have been able to see this coming back now. Of course, means we had a lot of impact when the pandemic struck us. And the most important thing I would like to tell here is that the take management was fully supportive in terms of ensuring that the subjects who participate in the study and the staff are protected well. So we initiated the testing of all the subjects who are coming for participation in our healthy volunteer programs, which run in different clinics of ours in this region of the country. And we were able to successfully bounce back and also get some of the studies which got stalled, as he was mentioning, to reperform them and then continue them and complete them. Few differentiating things that we have in the organization and in the business is that we went a little ahead of time in terms of the thinking and the approach that we wanted to adopt. Especially we started looking at the complex generics. So we went ahead in terms of making investments about an year and a half ago. So in the inhalation programs. So we have special inhalation chambers which are used for the inhalation studies. And today we are able to see that all those studies are lined up one after the other, that we have to now deliver it to the clients. Same was the case when we started up with our euglycemic clamp studies. So these are studies for the insulin program. So any insulin and its analog in the market when it requires a bio study has to go in with this clamp studies. So we were a little ahead of time in terms of having this, and this has actually helped us even in this pandemic times to give these studies back to the sponsors, and these are high value studies. The scientific depth and the technical expertise that we provide to the clients has really paved in a lot in terms of a lot of repeat business for us. As Mr. Srinivasan was mentioning, means we have about more than 80% of repeat business means that comes from the clients. In fact, a few of the discussions that I was having with some of the clients means 2-3 weeks back, they were actually asking us means how much capacity do you have means in terms of taking up these studies in your facilities. To say the last line here means we definitely are looking forward for a very different Q4 as we have a good load in terms of the order backlog with us, and it's only that the delivery has now come back to the pre-COVID levels, and definitely we would be coming back with the full top numbers in the near term. Thank you. Yes.
Thank you, Dr. Ayaz. So just to refresh, I think the depth of operating expertise that we have endears us to the clients to be able to get us repeated business. We have a healthy pipeline. I also want to call out that during the course of the year till date, we've repaid about $6 million in principal. I'm using the word till date. This is not maybe 31st December number, may include some numbers of January. And we've serviced our debt in full completely. I had earlier called out that the company was considering how to pay its debt. I think before the end of the quarter, we'll have an action plan that is there. So we're very confident of a bounce back and the ability to have a good Q4 and grow from there on. I think with these comments, I'll hand it back to the moderator. Thank you very much.
So we open it up for questions?
Yes, please.
Sure. Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Kanika Sinha from EPS Capital. Please go ahead.
Thank you for taking my question. So I wanted to understand that post-COVID, have there been any emergence of trends or any patterns that you may have observed when it comes to patient recruitment? Or say if we compare from the time that operations started resuming after the pandemic first hit to say now, what has been the change in patient enrollment activity?
Okay, so I think let me answer this in 2 parts. First is there has been a change in sponsor requirement in a post-COVID world. Before many sponsors used to insist on multi-country studies, by which I mean 15, 20, 25 country studies. Now most of the trial designs are adapted to a lesser number of country studies, maybe 4, 5, 7, and then using the real world evidence data on the balance, which is maybe data that has been done for studies of another sponsor can be used towards the current studies to be able to submit the information. So the requirement of lesser number of sites, lesser countries and lesser number of patients is an option that regulators are looking at, and that changes the framework of that. Second, in terms of actual patient recruitment, obviously it's still not at pre-COVID levels, so there is a data point it's a published data point that between May 19 and May 20, patient recruitment was down 95%. If you compare between December 19 and December 20, we are down about 30%. So there has been a significant improvement in patient recruitment from September onwards.
Thank you, sir. That's helpful. Just an extension of that question. So with more and more people getting vaccinated and due to get vaccinated now, does that change the way how trials are designed? For example, if somebody has had a COVID vaccine, does it mean that they can't participate in a COVID trial?
This, I think I'm going to ask either Soumya or Dr. Ayaz to answer this question. It's a great question.
Yeah, sure. Thanks, Sri. Maybe I'll take it up. Thanks, Kanika, for the question. In terms of, just to add what Sri was mentioning, one is definitely because of the COVID, the trend has changed in terms of reducing the burden to the patient. In addition to that, for your specific question, if the patient has had COVID vaccine, how will it impact? I mean, see, every study is different and every protocol is different. So depending on the particular therapeutic area which we are working on, if it is a COVID study and the study is for COVID patients, so we will go for that group of patients who are already affected with COVID. So there will be specifications which will be delineated within the protocol itself, and there will be deliberations done in terms of the impact of COVID vaccine and how the recruitment needs to happen within the inclusion and exclusion criteria. So I would say it is not a very direct yes or no answer, but it depends on the therapeutic area and that specific protocol when we are working on that project.
Thank you so much.
Thank you. The next question is from the line of Neerav Dalal from Maybank Engineering Securities. Please go ahead.
Hi. Thank you for the opportunity. A couple of questions. One is, at the current cost base, what is the revenue capacity that we can do? My question comes from the fact that, see, this quarter we did 16 million and revenues of about 30 million. And if we go back in time, at one point in time when obviously our services was higher, at 17 million we were doing about 56, 57 million dollars of revenues. So your comments on this?
See, while one can't accurately give, I can give a band.
Sure.
The band is this capacity can do something between, let's say, 46 and 52 million.
Okay. But then for clinical trials, you will also have a higher cost of revenue, right? Would that be the right assumption? So that number would continue to increase.
Yes. So the way we've done is we are going to, when we use cost of revenue, we are basically making it a variable cost.
Okay.
And in the foreseeable future, that will be the model where we'll be capex light and variable cost heavy.
Got that. And then in terms of our receivables up to last quarter, it was very high. How's the case? You did mention that we've done some repayments as well. So if you could share any debt number or a receivable number, anything might do.
I think we've come down very significantly because I don't have the number offhand, but I can tell you that from 31/3 to now, our receivables have come down very sharply. So you'll understand that the entire loss during the current fiscal year, plus the repayments of principal and interest, have all been taken care of only by receivables. There's been no new funding into the company. So the receivable collection has been very, very satisfactory.
Right. And just lastly, in terms of the capacity utilization that we've given, that you've shared, that would be for the BAB facilities that are there, plus the services Chennai services facility, services capacity that we have, right?
No. No. Now, here I was not mentioning to the factory capacity that was there. This is a hybrid of both the capacity available in terms of bandwidth of people to perform the activity and our own factory capacity. We also do trials at other places.
Correct.
So roughly I was giving this is more a utilization number of the enterprise as a whole.
Got that. And just lastly, is there, how's the services business? So how can we look at the two businesses, the services and the clinical? What is the share this quarter and how do you see it moving going ahead?
I think the clinical share of the revenues is obviously going to be much higher as we move forward. It's now a little over 55%. As we move ahead, the clinical share will obviously reach closer to 70-72% in the next couple of years.
Correct. So, in terms of services, we are getting business back, right? As the clinical, as the research has started.
That's it. But you have to understand that those services are on the back of studies only. The data for those services comes from the study.
Correct.
So this is the lead indicator. That's the lag indicator.
Got that. Thank you. I'll come back in the queue. I'll go back in the queue. Thank you.
Thank you. The next question is from the line of Mayank Pavla from Dalal & Broacha. Please go ahead.
Thank you for taking my question and congratulations on your good set of numbers. So actually, just if you could repeat the point on the debt figure, how much is the gross debt right now, and how much did we pay off in the first 6 months and the third quarter of FY21?
See, I may not have a quarter-wise breakup on this call, but we can reach that to you. When our debt on 1st of April was about $76 million. As on date, it would stand at about $70 million. So we paid off $6 million of debt. And we can send you a quarter-wise payment schedule, what we've done.
Right.
So we're current with our debt obligations.
Okay. Thank you. And so my second question is regarding in the earlier call, you had mentioned that we would be considering some sort of asset sale to reduce our debt burden. So did you mention that you will have a debt repayment plan by the end of Q4? Am I right?
Yeah, I think we're working on a few things. So what we'll be able to do, I think board is considering a few things. So obviously it can't be discussed before the board has deliberated and taken a view on what needs to be done. But our idea is that by the end of Q4, we'll have a plan where we try and see how to pay down this debt in an accelerated fashion and get back to very strong bottom line. Focus of the company is going to be on generating as much free cash flow as possible.
Sure. So can I squeeze one more question if possible?
Yeah, please go ahead.
And so earlier, you had mentioned that our book-to-bill ratio was 1.6 or 1.7 due to the COVID scenario because we won't be able to burn our order book as fast. So what would be that ratio right now? And part B of that question was that our order book was $185 million odd in Q2. So has it fallen to 170 as you had mentioned earlier?
Yeah, see, it's not fallen because I can't take some of the orders that have been closed in the first week of January. January is a very busy month for closing orders. So in absolute terms, on that particular day, that's the number that I said it is. It's because we consumed a lot more in Q4 compared to Q3. I won't want you to read this as going down. But 1.7 is not a state to sustain. A steady state, you should look at more like a 1.4:1, which would be a very good state. The 1.7 it became because of our inability to consume the orders. Now, as the ability to consume the orders comes back, we'll be more like a 1.4:1.
Okay. Got it. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity and congratulations, Srinivasan, on turning EBITDA profitable this quarter. My first question is if you can just share your order book which is related to COVID and non-COVID, if you can give that split.
Well, I won't have it offhand, but you can say the COVID order book would be somewhere in the region of about $20 million.
Okay.
20 to 22. I won't be way off the mark, but in that broad zone.
Sure. And then the second question regarding the order wins that you have highlighted in the presentation. My question is, are you seeing some competitors go away, or what are we doing differently to win such large orders from big clients? If you can just give a little bit more elaborate comment on that.
Yeah, I can. So first, I think in the pharma business, when you start winning orders and big orders, it happens over a period of time because you need to be able to establish credibility in a campus. I think we've stayed long enough to be able to do that. But this is not our first big order. There are several big pharma companies where we do a lot more of work, and that's been there for several years. In this case, I think the output and the performance of the clinical studies were very good. There were very adaptive trial designs that Soumya spoke about. So our ability to turn around in a very short span of time, whether it be even to get an IND approval for the trial to be conducted, or the post-trial DSMBs to be conducted and the trial data to be put in for the next phase. I think we've come a long way. We've done very well. And so this is an endorsement of the customer to be able to do that. Now, there is another question that you asked, whether we won all these at the expense of a competitor. Obviously, the answer is yes. But I also want you to recognize that there is a lot more outsourcing that is happening here. So as COVID conditions fritter away, you'll see the extent of outsourcing increasing tremendously, and that would lead to more opportunities for service providers like us.
I see. That's helpful. And my last question is about the debt. What is the payment due in the next 4 quarters or in the next financial year, if you can give some color around that?
I think it will be about, while I don't have an exact schedule right now with me to cull that out, but maybe it will be you mean the principal repayment, right? It should be around a little over $10 million.
Okay. So 10 million is what you have to pay over the next 4 quarters, right?
Mm-hmm. Somewhere in that region. Don't hold me to that as an exact number because I'm just calling this out from memory, but it may be slightly more or slightly less. Yeah. We can reach that data to you on a separate basis as a question.
Yeah, that will be helpful. And I assume the clients are not talking about the balance sheet, or are they? That's the last question.
No, I think the clients are not. The clients are concerned more about the scientific capability and the ability to deliver. So this doesn't impact them in any way.
Right. And in the discussions on the new project, it's not a topic that you have to address, right?
Come again, please.
I'm saying that in the new business discussions with the clients, this is not a topic that you have to answer to the clients that don't worry about it or something.
No, certainly not. But most of the clients have a procurement process which they go through, so they understand what company they're dealing with. So far, we've not had any challenges.
Okay. All right. Great. Thank you.
Thank you.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1 on your touchtone telephone. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to, could you throw some light on the insulin bio studies that you talked about?
Come again. Sorry, please. Could you repeat the question?
You mentioned the insulin bio studies, which could generate a huge business going forward.
Can I take that?
I'm going to ask. Yes, Dr. Ayaz, please.
Okay, thank you. I'm sorry I didn't get your name, but the insulin studies that I was talking about. So this comes in 2 phases. So the first one is the phase 1, which happens in healthy volunteer studies. As I was mentioning, so these require clamp studies. So what we call as clamping is that means we ensure that the glucose levels are maintained in the subjects in whom we are actually administering insulin. So this is required for each and every new product of insulin and its analogs. So if you look at insulin, means insulin is available, means as human insulin, means insulin is available as aspart. I mean, like this means you have many analogs of insulin. For all these analogs of insulin, you need the clamp studies to be conducted. The clamp studies require special requirements wherein the glucose is continuously monitored in such subjects. So we have the clamp facility means available in-house in our clinical units, and we run these clamp studies in those units. So what happens once we complete the studies, then we would be able to understand the PK and PD of the insulin molecule which is being tested. And after the results are produced back to the regulatory, which is the DCGI in India, I mean, then we get an approval means for taking it up in patients. So that's when my colleague Soumya pitches in, and then the phase 3 studies are conducted, which is ideally in the type 2 DM patients, means wherein the insulin molecule is actually tested. So we have a good pipeline means getting established over there, means wherein we are able to complete this phase 1 studies in our facilities and then moving it to the phase 3 studies. Does this answer?
Okay. This is at Bangalore.
Yeah, the facilities
have in Bangalore, Chennai, and Bangalore and Chennai.
Bangalore and Chennai. And have you got any orders for this study?
We do have. We have conducted, and we also have orders lined up.
Okay. So it is part of the order book.
Yeah, of course.
Okay. Yeah. Thanks.
Thank you.
Thank you. The next question is from the line of Neerav Dalal from Maybank Maintenance Securities. Please go ahead.
Yeah, thank you again for the opportunity. In terms of margins, now we've turned EBITDA positive, and also we are now more heavy on the clinical research side. So on a longer term basis, once things normalize and we get back to the revenue momentum, what should be the ideal EBITDA margin should one be looking at? Would it be that 16-18% range, or higher than this, or lower than this?
So Neerav, I'll take this in two parts. I think our immediate focus is on the revenue growth and getting to higher levels of cash profitability.
Correct.
Given the COVID situation and the way there is a start-stop in some of the areas, and there are delays, and there are some extra work that is required on the COVID protocols,
Correct.
We are not in a position to predict the margins in the short run.
Correct.
So I want to be very clear that I have a sense that we need a few more quarters before we can reflect on what will be the stable set of margins. But given the fact that we are approaching it more from a technology perspective and trying to see how much of the virtual trial environment can be built into it, we should be looking at margins that were higher than before. But when that is, I do not wish to. I think maybe if we have a couple of more good quarters, then we can get into discussions on how the margin profile is going to behave. Yeah.
Right. So currently the focus would be on consuming the order book. The other thing was in terms of your direct costs, other than employee costs. Should that trajectory be similar to what we saw in this quarter, or there is still room to squeeze that in terms of percentage of revenues?
No, I think see, whatever we had to do from a cost perspective, we've done most of that. We've tried the direct cost. When you say, if you refer to the cost of revenue, which is really
25% of revenue,
which is variable to every project.
Okay.
It is very difficult to predict how that is going to operate. Our assumption is that, see, one, pricing environment is improving dramatically. So that's a general scene. I have to tell you that we've been able to price ourselves better in this COVID situation.
Okay.
So pricing is definitely better. But the operation efficiency is not as good as it was in the pre-COVID levels.
Correct.
And these are because of very practical situations where at the sites people are testing COVID positive, or somebody in their homes is testing COVID positive. So there are delays, there are consequential issues, even on redoing the SOPs at different points of time. Obviously, that is a cost. That cost is today not predictive because the SOP is not laid out to make it predictive. It is something that is being done in an iterative fashion.
Okay.
And so we need to, I know where you are coming from an analyst to model this, but I'm sorry, we are also learning on the costing side now.
Okay.
So the modeling will have to wait till I have 2 stable quarters. Then I'll also be able to give you a very good guidance on how it's going to happen.
Got that. Not an issue. Thank you. Thanks a lot.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Tanish Mehta from DAM Capital. Please go ahead.
Hello.
Yes.
Sir, I had a couple of questions. The first one is that can we consider
excuse me, this is the operator. Mr. Mehta, may we request to speak a little closer to the phone, please? We are unable to hear you.
Hello?
Yeah, better, sir. Thank you.
Yeah, so can we consider this quarter as a base for the consequent quarters? That is the first question. Second question, in terms of margins, how far do you think that at this level we are sustainable? And the last question would be on the R&D. So we've brought down our R&D spends quite down. So how much of this is actually charged to the P&L and how much?
Okay, so I'll answer the last question first. There is no capitalization of any R&D expense. Everything is in the P&L, if at all. And we've reduced that drastically to the project level and trying to see how we can charge it up. So there is no R&D cost that is loaded on the balance sheet anywhere. That's number one. Number two, yes, we can consider Q3 as a quarter from which we will build. But we are not able to give you, while I can give you that this quarter, the revenue momentum will be good, the current quarter that we are in, which is Q4. I don't want to get into too much of prediction on the future because there are several things which we are seeing in the operating environment that does not allow us to predict too well. So we are going to see an uptick in consumption of our order book, an uptick in revenue. And like I just answered Meera in the last one, we don't want to get into predicting margins at this stage. A couple of stable quarters, we'll be able to tell that exactly. There'll be a complete most regulators are going through overhaul of SOPs. So we need to understand what that means in terms of costs. So we need a couple of more quarters to become predictable.
Okay, sir. Thank you and good luck for the coming quarters.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to the management for their closing comments. Over to you, sir.
Thank you. Ladies and gentlemen, thank you very much. It's been a privilege for me and my management team to be able to share our Q3 results and discuss the questions that you had. If you have any further questions, please reach out to us at investorrelations@takesolutions.com. We'll be very happy to address individual queries as well. Thank you and have a good weekend.
Thank you very much, members of the management. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.